What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. The stock market continues to tumble, guys. And I feel like I'm starting to panic a little bit. But one saving grace. I've been doing this for quite some time, and I know the whole purpose of the stock market is to go higher, or at least that's what I keep telling myself. But here's the headline. Dow closes lower by nearly 400 points. NASDAQ drops 1.9% as AI stocks resume their decline. U.S. stocks retreated on Thursday, as companies that have benefited from the artificial intelligence trade came under pressure yet again amid concern about their eye-watering valuations. The Dow Jones Industrial Average slid 398.70 points, or 0.84% to close at 46,912.30. The S&P 500 traded down by 1.12% to settle at 6,720.32, while the NASDAQ composite tumbled. That would be your big boy mega caps and your hyperscalers. It tumbled by 1.9% to end at 23,053.99. The NASDAQ 100 was down more than 2% since last Friday's close and is on pace for its worst week since early April. Can somebody say Liberation Day? The biggest downside impact came from NVIDIA, Microsoft, Palantir Technologies, Broadcom, and Advanced Micro Devices. That's enough right there, guys, to make anybody start to second guess if it's time to get out of this thing. But like I said earlier, one saving grace. The whole purpose of the stock market, in my opinion now, is to go higher. You just got to have some patience. I'm not a financial advisor. This is not financial advice. I'm just giving you my personal opinion. So please go out and do your own homework before you make any investment decisions. AI stocks have moved unevenly since the start of November, and that continued in Thursday's session. Qualcomm shed nearly 4% after the chip maker posted better than expected quarterly results, but said it may lose future business with Apple. AMD, a standout on Wednesday, lost 7%, while Palantir and Oracle declined nearly 7% and 3% respectively. Shares of AI darling NVIDIA and fellow Magnificent Seven name Meta Platform sink as well. Now, why is investors rotating out of the Magnificent Seven? Well, guys, from April to November, the Magnificent Seven has done well, and these investors have done well. Some of them may have decided time to take profits, especially with a 37-day government shutdown still nowhere near being resolved and having the government reopen. So a lot of investors are probably saying, you know something, I don't want to get caught with both hands in the cookie jar. Let's go ahead and take both hands out of the cookie jar, take our profits, and move on. Now, that's just my opinion. I don't have any fact behind that. That's just my opinion. So much of this stuff, from a valuation standpoint, was so lofty and priced for perfection that we're seeing in the market a bit of dichotomy between companies that are beating and raising versus those that maybe are beating on the top line, but providing tepid guidance on the bottom line or from an operating profit standpoint. This is coming from Mike Macio, president at FBB Capital Partners. That's the difference between some of these companies on earnings being up double digits versus being down double digits. And there's not a lot of in between. Thursday's pullback was made worse by concerns about the state of the labor market, as October saw a significant number of layoff announcements. Job cuts in the month totaled more than 153,000, almost triple September's rate and 175% higher than the same period a year ago. And this is according to Challenger, Gray, and Christmas. That's the highest level recorded for the month of October in 22 years. In a year that's shaping up as the worst for layoffs since 2009. So you got the government shutdown. Now you got these massive layoffs. You got a Federal Reserve who is sort of unsure if they're going to cut rates another 25 basis points in December. All of these are headwinds, guys, and it's scaring a lot of investors. That data suddenly paints a shaky picture of the U.S. economy, particularly in light of the lack of economic reports as a result of the ongoing U.S. government shutdown, now over a month old and the longest in history. We're starting to get dribs and drabs of the economic data that's not government related, and it's not super rosy. Adding that all that stuff is just setting up for some market weakness. That doesn't necessarily mean this is the start of a major skid or anything, he continued. The investment manager believes that if the government reopens and data thereafter shows the consumer is really not dead as the holiday season unfolds, a typical year-end rally could result. That's what I'm hoping for, guys, that typical year-end rally. But the government needs to open, in my opinion, for that to happen. All three major U.S. indexes are firmly in negative territory week to date. As of Thursday's close, the 30-stock Dow is on pace for a more than 1% loss, as is the S&P 500. The tech-heavy NASDAQ is down more than 2% this week. Investors were also looking to Washington on Thursday after the Supreme Court heard arguments for and against the Trump administration's tariff policy, questioning by Supreme Court justices Wednesday, who expressed some skepticism about the trade taxes legality, led many investors to expect a ruling against the Trump administration. I certainly don't believe the Supreme Court will vote against Trump on this tariff tax. I don't believe so. That's my opinion. You guys drop it down in the comment box and let me know what you think. What do you think the Supreme Court is going to do? Will they vote for or against Trump on this tariff situation? I say they vote for him, but I'd love to get you guys' feedback. As you can see, guys, a lot of volatility, a lot of moving parts, a lot of headwinds for this holiday rally that we have grown accustomed to over the last few years. But who knows, man? I'm a long-term guy. I dollar cost average in on the 15th every month in my favorite ETFs and my favorite individual stocks. I'm long on this thing for another 9 years, so it ain't really bothering me. Every opportunity I can, I try to buy the dip and couple that with the DCA, and I think I'll be in good shape. Again, just my strategy. You go out and figure out your own strategy. But here's a pro tip. Have a strategy. Sitting on the sideline, not asking to be put in the game, that's not a good strategy in my opinion, guys. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace. Moo is going to give you some NVIDIA stock when you open up a new Moo brokerage account and make a deposit. All you got to do is get down to the first link in the description box. That's the Moo brokerage link. Click on it and get all the details on how you can get some NVIDIA stock. Don't delay, act today. Second link down in the description box is the Wealth Builders Financial Community on Patreon. Guys, all we do in that community is help each other build wealth, get to financial freedom and passive income. If you want to be a part of our team, all you got to do is click on that second link. It'll take you over to Patreon, and then come sign up for the fastest growing financial community on Patreon. We'll call the Wealth Builders.